Welcome to the Deep Dive. Today we're taking a close look at Avalanche, a blockchain platform you hear mentioned a lot, often as an Ethereum competitor.
Right. And we've pulled together quite a bit of info, technical articles, discussions on fees, tokenomics, security audits, market data, even how it fits into DeFi and regulation.
So what's our mission with all this material?
Well, the goal is really to boil it all down, extract the key insights about Avalanche, what makes it different, what it's actually doing in the real world.
And hopefully keep it clear without getting too lost in the jargon.
Exactly. Clarity is key.
Okay, so to start us off, what is Avalanche, fundamentally?
Essentially, Avalanche calls itself a network of networks. That multi-layer idea is pretty central.
A network of networks.
Yeah, it's built for speed, scalability, security.
Yeah.
Affordability and accessibility are big focuses too. It's open source, so anyone can build dApps, decentralized apps, or even launch their own custom blockchains on it.
And it has its own token, AVX, right?
Correct. AVAX is the native token. There's a hard cap on the total supply, 720 million tokens.
And what's it used for?
The main things are paying transaction fees, securing the network that's done through staking, and also participating in governance, deciding on the future direction.
Staking.
Yeah.
So people lock up their tokens.
Exactly. And an interesting point is that the transaction fees paid in AVXX, they get burned.
Burned, meaning removed completely.
Permanently removed from circulation. So over time, that could make AVX more scarce.
You mentioned it's not just one blockchain, though. I've heard about different chains within Avalanche.
You're right, yeah. It's got this unique multi-chain setup, 3 core blockchains, each doing something different.
Okay, what are they?
First up is the X chain, the exchange chain. Its job is creating and swapping AVX and other digital assets.
So for trading mostly?
Primarily, yeah. It uses the main Avalanche consensus mechanism, and it has fixed transaction fees 0.001 AVAX. People often point to its speed, especially compared to the C chain.
Oh, the C chain. That sounds familiar. Is that where the apps live?
Precisely. The C chain is the contract chain. It's where you find the smart contracts and the dApps.
And it works with Ethereum tools.
Yes. Crucially, it's compatible with the Ethereum virtual machine, the EVM. That compatibility was a huge deal for getting DeFi projects on board early on.
DeFi being decentralized finance.
Right. And at its peak, the value locked in DeFi protocols on the C chain was over $10 billion. It uses a slightly different consensus mechanism called Snowman.
Okay, X chain for assets, C chain for contracts. What's the third one?
That's the P chain, the platform chain. Think of it as the coordination layer for the whole network.
Coordination. How so?
It manages the validators, the computers securing the network. It handles all the staking operations. And importantly, it's where new layer 1 blockchains get created.
Layer 1s, those used to be called subnets, right?
Exactly, subnets. They're basically customizable blockchains for specific purposes. The P chain also uses that Snowman consensus.
And you need AVX to be a validator.
You do. To validate on the main network, the primary network, you need to stake at least 2,000 AVAX.
This Avalanche consensus mechanism sounds pretty central to the whole thing. What makes it stand out?
It really is key. The design goals were scalability, being robust, and decentralization.
The usual blockchain goals, then.
Well, yes, but the way they approach it is interesting. It sort of blends ideas from classical consensus and Nakamoto consensus, the kind Bitcoin uses.
Classical and Nakamoto. How does that work?
The idea is to get the best of both. High transaction volume, really fast finality, we're talking under a second, for a transaction to be irreversible and doing it all pretty energy efficiently.
Sub-second finality, that's really fast. How does it achieve that?
The core idea is something called repeated subsampled voting.
Okay, break that down.
Imagine a node, right? It wants to check if a transaction is valid. Instead of asking everyone, it just asks a small random group of other validators.
Like a quick poll.
Exactly like a quick poll. It gets their opinions. If enough of that small sample agree, the node leans towards that opinion. Then it repeats the process, polling another random subset.
And it keeps polling until
it sees a strong, consistent agreement over several rounds. That's how it reaches consensus without needing global communication every single time.
So it's these repeated small polls that make it fast and scalable.
That's the idea. The snowball algorithm is part of this. It has parameters like K for the sample size, alpha for how many need to agree in a sample, and beta for how many consecutive rounds of agreement are needed for a final decision.
Are those parameters big?
Actually, no. On Avalanche, they use pretty small constant numbers, like K is around 20, beta is around 20. Because these don't grow with the network size, the communication needed stays manageable. That's key for scalability.
I also saw something about transitive voting. What's that?
Yeah, that's another efficiency trick. Basically, when a validator votes for a new block, that vote automatically counts as a vote for all the blocks that came before it in that chain, its ancestors.
So confirming one block helps confirm its history.
Exactly. It streamlines things, helps push more transactions through the network faster.
How does this compare to, say, Bitcoin's finality? You hear about waiting for confirmations there.
That's a really important difference. Avalanche aims for that near-instant, irreversible finality. Once it's confirmed, it's done.
But Bitcoin?
Bitcoin and Ethereum use Nakamoto consensus, which has probabilistic finality. A transaction gets included, but there's always a tiny, tiny chance it could be reversed later if the chain reorganizes.
Which is why people wait.
Right. You wait for multiple confirmations to be more certain. That can take minutes, sometimes an hour or more for really high confidence. Avalanche's speed here is a big selling point for applications needing quick, certain settlement.
And participating requires staking AVAX, so it's a proof of stake.
Correct. It's a proof-of-stake system. Validators stake AVAX. The amount they stake influences how often they get picked for those voting samples.
More stake, more influence.
Sort of, yeah. More stake means you're queried more often. It's your weight in the consensus.
What if a validator misbehaves? Do they lose their stake? Like slashing?
Interestingly, Avalanche doesn't have slashing in the traditional sense, where your staked AVX gets taken away for bad behavior.
No penalty then.
Well, validators who perform poorly or are offline don't receive snaking rewards, so there's still a strong financial incentive to be reliable and honest. You just don't get the carrot if you don't play nice.
Okay, that's a good grasp of the tech. But what about the real world? What's Avalanche actually being used for, besides trading AVX?
Right, let's look at the impact. And there are some pretty diverse examples already, even though it's relatively young.
Like what?
Take Lemonade Insurance. They've built an app on Avalanche for crop insurance, specifically for small farmers in Kenya.
Crop insurance on the blockchain, how does that work?
They use smart contracts and oracles. Those are services that feed real-world data onto the blockchain. Farmers can sign up with basic phones. Policies might cost just a few dollars.
Okay.
And the cool part is, if certain weather conditions happen, verified by the oracle, the smart contract can automatically trigger an insurance payout.
So it's automated based on real data.
Exactly. It provides a financial safety net in areas where traditional insurance might be unavailable or too expensive, or even pulling back, like we've seen State Farm do in California due to climate change risks. Avalanche's speed and low cost help make this kind of microinsurance feasible.
That's actually really compelling, using it for a real need like that. What else?
Another big one involves Deloitte working with FEMA, the U.S. Disaster Relief Agency.
FEMA, what are they doing?
They're using Avalanche, specifically a permissioned subnet, to help manage the distribution of public assistance payments after disasters.
Permissioned, so it's controlled.
Right. It allows an organization like FEMA to get the benefits of blockchain transparency, security, automation, while still maintaining control and compliance needed for handling public funds. It's about making disaster relief distribution more efficient, especially as disasters become more frequent.
Okay, so microinsurance and large-scale government logistics. Quite a range. Any others?
Definitely. In the entertainment world, there's Dreamus in Korea. They're part of SK Planet, a huge company. They use Avalanche for their OK Cashback ticketing app.
Ticketing, what's the benefit there?
It has a huge user base, like 21 million people. The idea is using Avalanche NFTs for tickets could create an immutable record, helping fight scalping and counterfeit tickets, which is a massive problem.
Yeah, ticketing fraud is rough. That makes sense. What about pure finance?
Within traditional finance, a company called Intane launched Intane Markets on an Avalanche subnet. It's a marketplace for tokenized structured finance assets.
Tokenized assets.
Yeah.
So representing real-world financial products on the blockchain.
Exactly. They're aiming to make that multi-trillion-dollar market more transparent and efficient, maybe even open it up to smaller investments by fractionalizing things.
Even gaming seems to be getting involved.
Yeah, the AAA game Off the Grid is integrating Web3 elements on Avalanche. It's optional, but players can earn actual digital ownership of in-game items through achievements.
Play to own, they call it.
Kind of, yeah. Play to own. It adds another layer to the game. Avalanche's speed is important here for handling potentially lots of small in-game transactions.
It's not just these huge companies or AAA games, though.
No, absolutely not. There's TYB, for instance. They offer loyalty solutions for Shopify merchants.
Loyalty programs.
Yeah, using Avalanche, brands can reward customers with digital collectibles like NFTs for doing things like leaving reviews, engaging on social media, making referrals. It helps build a direct connection.
Interesting. One more real-world use case.
Sure. Blockticity is tackling supply chain fraud. It's a massive issue, like trillions of dollars globally in fake paperwork.
How are they using Avalanche?
They mint product certifications as NFTs on Avalanche and link them to physical goods with QR codes. Scan the code, you get immutable proof of authenticity.
What kind of products?
They started with hemp and cannabis, apparently certified hundreds of millions of dollars worth already, but they're looking at sneakers, fruit, other things where authenticity matters.
Wow, okay. That's a really broad set of applications. Let's switch back to the AVAX token itself. You mentioned the cap supply and fees being burned. How does new AVX get created?
Right, so while the total is capped at 720 million, and half was minted at the start, new AVX is constantly being created.
Oh.
As staking rewards. The validators securing the network earn newly minted AVX for their work.
So it's inflationary for now.
Yes, essentially. The minting offsets the burning from fees, but because we're not near the cap yet, the supply is still growing. It'll likely stay inflationary until we get much closer to that 720 million cap.
I remember seeing something about the rewards formula being complex, but is there a simple takeaway?
The main thing to know is that staking for longer periods is incentivized.
That's so.
If you lock up your AVX for the maximum duration, which is 1 year, you actually earn a higher percentage yield compared to staking for the minimum 2 weeks. It's about 11% more, roughly.
So it encourages long-term commitment.
Exactly. Helps with network stability.
What about the practical side for users? Transaction fees. What do they typically look like on Avalanche?
Based on what people share, like on Reddit and forums, common things like swapping tokens on a DEX or adding liquidity might cost somewhere between, say, 30 cents and 60 cents per transaction.
How does that compare?
Generally, people see it as better than Ethereum Layer 1, which can get quite expensive, but maybe a bit higher than some other chains like Polygon at times.
So competitive, but maybe not the absolute rock bottom cheapest.
That seems fair, yeah. And some DeFi apps on Avalanche have features like auto compounding.
Auto compounding?
Yeah, where your earnings are automatically reinvested for you. That can reduce how often you need to manually transact and pay fees to optimize your yield.
Are fees always in that 30-60 cent range?
Not necessarily. Some users report much lower fees, maybe 7 to 9 cents for simpler contract interactions, but others have seen higher costs if the network is busy or the transaction is very complex.
So it varies.
It definitely varies. There are tools, though, like gas trackers. Snowtrace.io is one where you can check current network fees.
Makes sense. And security is obviously crucial, especially with all the DeFi applications. How are smart contracts secured on Avalanche?
Well, first off, Avalanche supports Solidity, the same language Ethereum uses. That helps interoperability. You see established protocols like AKV and Curve deploying there.
So developers familiar with Ethereum can build on Avalanche easily?
Relatively easily, yes. But security still relies heavily on audits.
Smart contract audits.
Exactly. Projects typically hire specialized firms to scrutinize their code for vulnerabilities before launch. Cyphren is a well-known name that does a lot of audits in the Avalanche space.
What does an audit actually involve? Can you give us a quick rundown?
Sure. It usually starts with setting the scope, what code is being audited, and locking down a specific version. Then security engineers dive deep into the code, looking for bugs, logic errors, potential exploits.
And they report back.
Yeah, they produce an initial report with findings, usually ranked by severity. The project's developers then work on fixing those issues.
And then
the auditors review the fixes and finally issue a final report. It's a critical step to try and catch problems before users' funds are at risk.
Okay, let's zoom out again. What's the market saying about Avalanche? What's the current outlook?
All right, so as of when we pulled this data, April 22nd, 2025, AVX was trading around $22.24. It actually had a pretty good 24 hours, up nearly 12%.
And the overall size?
Market cap was sitting around $9.25 billion, with about 416 million AVX circulating out of that 720 million total potential supply.
It's seen some big swings, though, hasn't it?
Oh, definitely. You have to remember the all-time high was way up over $146 back in November 2021. Then the low was under $3 in late 2020. Shows the volatility.
Classic crypto volatility.
Yeah.
So despite that, what are the arguments for future growth? Why are people optimistic?
Several things. One is just the continued growth of its ecosystem, more DeFi, more NFTs, this push towards tokenizing real-world assets.
Right.
Favorable market conditions. If we see more institutional interest coming into crypto generally, that could lift platforms like Avalanche. And then there are the core tech advantages, the speed, the scalability potential.
What are analysts predicting? Any price targets?
Well, predictions are always tricky, right? But for 2025, forecasts range quite widely. Some see it maybe around $24. Others are looking at over $100.
That's a huge range.
It is. And longer term, for 2030, the range is even wider, from maybe $50 up to over $550 in some really bullish cases. Really highlights the uncertainty.
And that wide range points to the risks too, I imagine.
Absolutely. Market volatility is number one. Then there's regulatory uncertainty. How will governments approach crypto and DeFi? And of course, fierce competition.
Lots of other blockchains out there.
Tons. Ethereum, all its layer 2s, other platforms like Polygon, Solana, Cosmos, Polkadot. It's a crowded space.
I've seen Avalanche described as a heterogeneous network of high-performance blockchains. That sounds a bit dense. What does it mean?
Yeah, it's a mouthful. Heterogeneous just means diverse or varied. So it's a network of many different blockchains, those layer 1s or subnets we talked about.
Different how?
They can be customized. They don't all have to be the same. You could have an L1 optimized for gaming, another for finance with specific privacy features. It's not one size fits all.
And the high-performance part
Refers back to the speed and scalability goals. The network of blockchains idea is their approach to scaling, add more specialized chains horizontally rather than trying to make one single chain do everything.
What's the big picture goal? What's their ultimate mission?
Their stated mission is pretty bold. Tokenize all of the world's assets.
Tokenize everything.
That's the ambition. It points to a strong focus on enterprise and institutional uses, things that need customization, privacy, permissions, but also gaming and consumer apps.
There's been talk about a big upgrade coming, Avalanche 9000 or the Etna upgrade. What's the deal with that?
Right, Etna. That's a really important one to watch. The main goal is to make it much cheaper and easier to launch these custom layer 1s on Avalanche.
Oh, what's changing?
They're removing the requirement for validators on these custom L1s to also stake a minimum amount of AVAX on the main network, the primary network.
So you won't need 2,000 AVAX just to validate a custom chain.
Exactly. And they won't have to validate the primary network either. The idea is this lowers the cost and complexity, hopefully leading to an explosion of new L1s.
Especially for businesses needing specific compliance.
Precisely. Enterprises could launch their own L1s with self-regulated security, which might be necessary for handling tokenized real-world assets under certain regulations.
When is this Etna upgrade expected?
The target is before the end of 2024.
And are we already seeing these custom L1s handle significant activity?
Yes, there are some good examples. DeFi Kingdoms, the game, runs on its own L1 and has apparently surpassed the main C chain in gas usage at times. Same with Dexalot, a decentralized exchange on its own L1. It shows the model can work for scaling specific applications.
What about the AVX SEX token supply? Those early investor and team tokens, are they still being unlocked?
That's always a concern for markets, but the good news there is that the vast majority of the unlocks for the team and early investors were actually completed by August 2024.
So the big sell-off pressure from unlocks is mostly done.
Largely, yes. There are still some foundation tokens vesting until 2030, but the big chunks are mostly distributed now.
How does Avalanche stack up against the competition, really? You mentioned Ethereum, Polygon.
It's complex. You've got Ethereum and its layer 2s focusing on scaling Ethereum itself. You have roll-up ecosystems like Arbitrum and Optimism doing similar things. Polygon has its various solutions, aiming for an Internet of Blockchains feel too. Then Cosmos and Polkadot focus heavily on interoperability.
So where does Avalanche fit? What's its unique angle?
I think it boils down to that core architecture. The focus on highly customizable sovereign layer 1s interconnected within one network, combined with its specific consensus mechanism. It's betting on that customization being key, especially for enterprise adoption.
What are the biggest challenges and opportunities looking ahead?
Well, the big opportunity is clearly expanding that L1 ecosystem, getting more diverse, high-value applications built. The Aetna upgrade is key there.
And institutional adoption.
Definitely. Turning those partnerships, Deloitte, FEMA, JP Morgan, Citi experiments into real, sustained usage on permissioned L1s is crucial. That's a challenge, moving from pilot to production.
Anything else?
Showcasing the power of their custom VM tools, like the Hyper SDK, to attract developers looking for deep customization. That's another big opportunity for differentiation.
Are there any specific events people should watch out for?
Yeah, the Avalanche Summit LATAM 2024 is happening, I think, in October. And then, of course, the launch of the Aetna upgrade, Avalanche 9000, targeted before year end. Those are the big ones.
Okay, let's shift gears slightly. Avalanche hosts a lot of DeFi activity. Can we talk about DeFi on Avalanche and maybe the regulatory picture around it? First, maybe a quick refresher on DeFi.
Sure. So DeFi, decentralized finance, basically uses blockchain, crypto, especially stablecoins, and smart contracts to offer financial services outside the traditional banking system.
So cutting out the middlemen, like banks.
That's the core idea, yeah. Users interact directly with protocols, usually controlling their own funds through unhosted wallets.
What are the main parts of DeFi?
You've got the smart contracts automating rules, the software protocols themselves, the dApps that provide the user interface, often governance tokens for voting, and then the platforms themselves, decentralized exchanges, DEXs, lending platforms, derivatives, and so on.
And most of this started on Ethereum.
Overwhelmingly, yes. Ethereum is still where the majority of DeFi activity happens, though platforms like Avalanche have captured a significant share.
What are the supposed benefits? Why use DeFi?
Proponents point to things like easier access, anyone with internet can potentially use it, more efficiency through automation, maybe better privacy in some ways, often lower fees than traditional finance, faster innovation because it's open source, and that peer-to-peer nature.
Sounds good, but there have been plenty of horror stories too. What are the risks?
Oh, absolutely. The risks are significant. User error is a big one. Send funds to the wrong address, they're gone. Smart contracts can have bugs or vulnerabilities that get exploited. We see hacks constantly.
Right, the hacks.
Yeah, software can malfunction. The value of DeFi tokens can be incredibly volatile, and because it's often anonymous or pseudonymous, it attracts scams and cyber attacks. Plus, you generally don't have the same consumer protections as with a regulated bank.
How are regulators dealing with all this? It seems complicated.
It is complicated, and the regulatory landscape is definitely still evolving. Most current crypto rules focus on centralized companies, like exchanges where you sign up and verify your identity.
So they don't really cover direct wallet-to-protocol DeFi transactions. Yeah.
Often not directly, no. Transactions from unhosted wallets can fall outside existing KYCML know your customer, anti-money laundering requirements. Regulators worldwide are getting more involved, but it's tricky because DeFi is global and fragmented.
Any specific examples, like in the EU?
Yes, the EU has been proactive. They've got MiCA, the Markets and Crypto Assets Regulation, that aims to create a unified set of rules for crypto assets and service providers across the EU.
What's the goal of MiCA?
To provide legal certainty, encourage innovation, but also protect consumers and investors. It's expected to start taking effect properly in 2024.
Anything else from the EU?
They also have the DLT pilot regime. DLT is distributed ledger technology, basically blockchain. This pilot lets financial institutions experiment with using blockchain for traditional financial instruments like stocks or bonds under temporary exemptions from some rules. That's already active.
Okay, this has been incredibly thorough. A real deep dive into Avalanche. Let's try and summarize the key takeaways.
Yeah, I think the main things are Avalanche's unique multi-chain design with those customizable L1s, the fast finality from its consensus mechanism, the growing list of real-world uses across different sectors, and its position within the broader, evolving DeFi space with all the opportunities and regulatory questions that involves.
And it definitely has that strong ambition to be a major player, especially targeting enterprise and institutional needs with its customizable, potentially compliant networks.
Exactly. That focus on tailoring blockchains for specific business needs seems to be their core strategic bet.
All right, on that note, here's something for you, the listener, to think about. Given Avalanche's tech, especially this idea of a network of specialized blockchains and its growing adoption, how might that architecture reshape certain industries? Could it genuinely challenge the dominance of established players like Ethereum in the long run? What are the real implications of customizable blockchains in this big push to tokenize everything?
Lots to ponder there.
Indeed. That wraps up our deep dive for today. Join us next time as we explore another fascinating topic.